Hi team, this is AJ with Trading Trainer on the evening of Wednesday, October 20th with your Trading Trainer Daily Insights. What we're going to do here is take a look at the broad market by taking a look at representative indexes of our watch list, namely the Dow Jones Industrial Average, the Nasdaq Composite Index, and the S&P 500 Index. We're also going to take a look at the New York Stock Exchange Composite Index and the VIX Volatility Index. But before looking at any charts, team, I'm actually going to log into the Trading Trainer Learning Community web portal by going to login.tradingtrainer.com. Now, once I've logged into the Learning Community web portal, I'm going to ask that you go to the Daily Insights tab and then go to the Recommendations sub-tab. Look at the recommendations for tomorrow's trading session. Also, you're going to find the audio commentary there. Please listen to it. In the meantime, for this particular broad market analysis of this Charts of Interest video series, I'm going to go right to Index Stats. Okay, as you can see here, our trading bias is neutral bullish. Industrial shown by the Dow Jones Industrial Average gained 1.18%, and IC volume was light and mixed average. Tech stocks shown by the Nasdaq Composite Index gained 0.84%, again on light mixed average volume. And the large cap shown by the S&P 500 Index gained 1.05%. I want you to notice on these big three that it's only the Nasdaq that didn't recover from yesterday's losses. Then you take a look at the secondary indexes, and the 100 best stocks out there shown by the S&P 100 gained 1.04%. Mid cap shown by the S&P 400, 1.29%. Small cap shown by the S&P 600 and the Russell 2000, two different perspectives on small caps, gaining 0.94 and 1.11%. The New York Stock Exchange Composite Index gained 1.35%. Volatility fell 4.07% to 19.79, again below the 20, barely. Gold gained 2.05, oil 1.3%. You'll see here that it's the small caps and the commodities that did not come out of being negative for the week yet. Okay, let's move on to our watch lists. Nothing being identified by our cover call writing or option trading candidates. Let's move on to our daily picks. And the reason why I'm going to go to our daily picks is because I want to go ahead and take volume and trends and apply it to my indexes to get kind of an idea of what's going on here. So volume dropped from yesterday's distribution day, but it's still about at the 50-day, if not slightly higher than the 50-day average, and about the 200-day, if not slightly below it. Oscillators just about around there. We've got a long duration trend, meaning that the 30-day simple moving average is trending up. Short duration trend kind of disappeared with yesterday. That's our 5-day simple moving average, trying to figure out where it's going to be going. Now, the other thing I want to do is I want to take my templates and apply them to my indexes again to get a kind of a qualitative idea of what's going on. So we have a trigger of gold, but we do have enough trends here of the different simple moving average counts to have a breakout. You can see here the trend reversal, again, based on what happened yesterday, kicked in a little bit, same with our trend test. And you can see here that we actually have some Bollinger Band width indexes that are still pretty wide, but getting smaller if you trend them from day to day. And that our bar counter has increased. All right, time to look at some charts. All right, we'll go and we'll use a user template. I got a couple simple moving averages on there, and we'll pull up the Dow first of all. All right, so looking at the Dow, we see how we actually, at one point here during the day, recovered all of our losses from the previous day. And we did a pretty good job, as you can see as well. If we pull up the 7-day simple moving average, we're right there. So what happened? It probably, and we're also back above 11,000. We probably realized that the China interest rate hike was not as emotional as it had to be, like we said yesterday. There were some great earnings, especially around the airlines today. The Fed Beige Book came out, hinting at more quantitative easing by the Fed, which the business owners of the stock market companies are really excited for. So we got some more pleasant news today, plus we got to sleep on what we did yesterday. Yesterday, the bear jumped out the window. And so yes, volume is a little bit lighter, but we expect that when the proverbial poop hits the fan, volume tends to be higher than when people accumulate. So that's kind of the scoop here. Let's take a look at what we've got. All right, so we're between support and resistance here very solidly, closing at 11,107. Yes, 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 yes. Let's make sure we have the 200-day. So everything isn't in line, and again, coming close to 11,200, that's pretty much where we're going to start seeing our gains above the highest point in April. It's when we're going to start really saying we're back on the trend continuation, if you will, one big giant trend continuation. Let's look at the Nasdaq. All right, so here's the Nasdaq. Again, we're at 2,457, just barely above that level of support, so we're good to go. You can see that the 50 is coming close to crossing above the 200, just maybe a day or two away. I'm going to keep that a no. Otherwise, everything else is a big fat yes. And if we do put the 7-day simple moving average in there, you'll see we're above the 7-day simple moving average as well. So we're good to go all over here. Now moving on to the S&P 500. Again, just about erased all the losses that we had the previous day. Coming up with my notes here. We are 1,178, so we're back into our trading zone here. And let's go ahead and we're above the 200, or above the 7-day. Let's throw the 200 back in there. And the 50 has yet to cross. Again, we're 1 or 2 days away from the 50 crossing the 200-day. And that'll be significant as well. So we'll leave that at no. Neutral bullish. Again, we're getting close to those highs made in April. New York Stock Exchange Composite Index. Same thing. And here is a case where the 50 did come across the 200. And we are coming close to being above the April highs. The VIX, we dropped 4.07%. And we're currently at 1979. Overall trading bias is neutral bullish. Broad market personalities confirmed upward rally. What yesterday and today has told me, team, is that we are very much in, despite the VIX being down, with earnings season here, with an election in the United States coming up in just over 2 weeks now, with the quantitative easing by the Federal Reserve looming over us. It might be happening, it might not be happening, but there's a lot of things pointing at it will be happening at the next FOMC meeting. And holiday buying looks like it can be starting very soon here. People are getting prepared for the holidays. Last year they took a little break from that, so this year they're probably more eager to get out there and buy each other gifts. And there is a slight hint at, some good news coming even from housing. So with all of this alignment going on, but it's still iffy. And the bears, as we saw yesterday, are ready to pounce at anything. So we have to be prepared. That's why we're not calling this a bullish trading bias. We probably won't call it a bullish trading bias till we get above April's highs. But you have to be prepared for anything. Have your stop losses in place, have your defensive strategies in place, and be ready to be tossed around, especially during earnings season. Now is a great time to be doing earnings type plays or volatility type plays on your different option strategies. Hey, that's all I've got for you today. Please take care.